Bitcoin and XRP are two of the biggest names in the world of cryptocurrency. While both are digital assets that have captured the attention of investors and the public alike, they serve very different purposes and have unique stories behind their creation. In this chapter, we'll take a closer look at what sets these two cryptocurrencies apart, how they work, and why they continue to be at the center of so many conversations about the future of money. Bitcoin, created in 2009 by the mysterious figure known as Satoshi Nakamoto, is widely recognized as the original digital currency. It was designed to be a decentralized alternative to traditional money, allowing people to send and receive value over the internet without the need for banks or governments. Bitcoin's blockchain technology ensures that every transaction is secure, transparent, and cannot be altered, which has helped it gain a reputation for trustworthiness in the digital age. Often referred to as digital gold, Bitcoin is valued not just for its technology, but also for its scarcity. There will only ever be 21 million Bitcoins in existence, making it a rare asset that many people see as a hedge against inflation and economic uncertainty. During times of financial instability, investors often turn to Bitcoin as a safe haven, much like they would with gold. Its price can be volatile, but its long-term growth has made it a favorite among those looking for an alternative store of value. XRP, on the other hand, was created by Ripple Labs with a very different goal in mind. Instead of being a store of value, XRP is designed to make international payments faster, cheaper, and more efficient. Traditional cross-border transactions can take days and involve high fees, but XRP aims to solve these problems by enabling near-instant transfers at a fraction of the cost. This makes it especially attractive to banks and financial institutions looking to modernize their payment systems. Both coins are closely watched by investors and enthusiasts alike, with their prices often making headlines around the world. The value of Bitcoin and XRP can change rapidly, influenced by everything from regulatory news and technological developments to shifts in global markets and investor sentiment. As a result, they are often at the center of debates about the risks and rewards of investing in cryptocurrencies. Understanding the factors that influence their price movements is key to navigating the exciting world of cryptocurrency. This includes keeping an eye on market trends, technological upgrades, legal decisions, and even social media buzz. For anyone interested in digital assets, learning how to interpret these signals can make a big difference in making informed decisions and managing risk. Whether you're a seasoned trader with years of experience or just starting out on your crypto journey, staying informed about these digital assets is crucial in today's rapidly evolving financial landscape. By understanding the unique roles of Bitcoin and XRP, and by keeping up with the latest news and trends, you can better position yourself to take advantage of the opportunities and navigate the challenges that come with investing in the world of cryptocurrency. April 2025 brought a dip in Bitcoin's price, with the cryptocurrency experiencing a volatile period. Starting the month around $85,000, Bitcoin saw a significant drop to $74,000. This downward trend was primarily attributed to concerns over potential U.S. tariffs on cryptocurrency transactions. Adding to the pressure was a general slowdown in trading volume due to a U.S. market holiday. Investors already wary of the potential tariffs took a step back, leading to reduced trading activity. This combination of factors contributed to Bitcoin's April slump. While Bitcoin faced turbulence, XRP demonstrated relative stability throughout April 2025. Despite briefly dipping below a key resistance level of $2.10, XRP largely traded within a range of 48 to 56 cents. This resilience can be attributed to Ripple Labs' ongoing legal battle with the U.S. Securities and Exchange Commission. The outcome of this legal battle holds significant weight for XRP's future, and investors are closely watching for any developments. A positive outcome could potentially propel XRP's price upwards, while an unfavorable ruling might have the opposite effect. Beyond the individual performance of Bitcoin and XRP, several macroeconomic and geopolitical factors influenced the broader cryptocurrency market in April 2025. Concerns about potential U.S. tariffs on cryptocurrency transactions, as reported by outlets like CryptoTimes and Barron's, created a wave of uncertainty among investors. Simultaneously, the Federal Reserve's tightening monetary policy, aimed at curbing inflation, also contributed to a risk-off sentiment in the market, investors, wary of potential economic slowdowns, pulled back from riskier assets like cryptocurrencies, further impacting prices. As we look ahead to May 2025, the future of Bitcoin remains a hot topic of debate among investors, traders, and financial experts worldwide. The cryptocurrency market is known for its volatility, and Bitcoin, as its flagship asset, is no exception. Predictions for Bitcoin's price in the coming months are highly varied, reflecting the uncertainty and complexity of the current market environment. Some experts foresee the possibility of further declines, citing recent corrections and the potential for increased regulatory scrutiny. Others, however, are more optimistic, suggesting that Bitcoin could be on the verge of a significant rebound if certain conditions are met. A key focus for many analysts is the $85,000 resistance level. This price point has acted as a major barrier in recent trading sessions, and breaking through it could signal a new wave of bullish momentum. If Bitcoin manages to surpass this resistance, some believe it could quickly climb towards the $90,000 or even $95,000 mark, fueled by renewed investor confidence and increased institutional interest. Such a breakout would likely attract significant media attention and could trigger a fresh influx of capital into the market, further amplifying the upward movement. On the other hand, there are those who urge caution. They point out that if Bitcoin fails to break above the $85,000 resistance, the cryptocurrency could remain trapped in a period of sideways movement, consolidating between the $80,000 and $85,000 range. This scenario would likely frustrate both bulls and bears, as the market waits for a decisive move in either direction. Extended consolidation could also lead to decreased trading volumes and a temporary lull in market excitement, as participants adopt a wait-and-see approach. Ultimately, the direction Bitcoin takes in May will depend on a complex interplay of factors. Macroeconomic conditions, such as inflation rates and central bank policies, will play a significant role. Regulatory developments, both positive and negative, could sway investor sentiment dramatically. Additionally, the overall mood of the market, whether driven by fear or optimism, will influence price action. As always, Bitcoin's journey remains unpredictable, and investors are advised to stay informed and prepared for a range of possible outcomes. As we look ahead to May 2025, the future of XRP stands at a fascinating crossroads. This month is shaping up to be a defining moment for the cryptocurrency, one that could set the tone for its trajectory for years to come. Investors, traders, and crypto enthusiasts around the world are watching closely, aware that the events unfolding now could have far-reaching consequences for the entire digital asset landscape. At the heart of this anticipation lies Ripple Labs' ongoing legal battle with the U.S. Securities and Exchange Commission. The outcome of this high-profile case is expected to play a pivotal role in determining not just the price of XRP, but also the regulatory landscape for cryptocurrencies in the United States and beyond. The stakes are enormous, with billions of dollars and the future of blockchain innovation hanging in the balance. Should Ripple secure a favorable ruling, the impact on XRP could be immediate and dramatic. Such a decision would likely inject a surge of confidence into the market as investors interpret the verdict as a green light for broader adoption and institutional participation. We could see a wave of renewed optimism, with trading volumes spiking and sentiment turning decisively bullish. In this scenario, XRP may not only break through the $2.10 resistance level, but could also establish new highs, as technical traders and long-term holders alike pile in. The momentum could carry XRP into uncharted territory, with analysts eyeing the next key levels. Many experts suggest that a positive outcome could propel XRP towards the $2.30 to $2.50 range, or even higher if market sentiment remains strong. This would mark a significant recovery from previous lows and could signal the start of a new growth phase for the asset. On the other hand, if the court's decision goes against Ripple, the consequences could be severe. An unfavorable outcome would likely exacerbate the downward pressure on XRP, as uncertainty and fear grip the market. Investors might rush to reduce their exposure, leading to sharp declines and heightened volatility. In this scenario, XRP could see its price pushed further down, potentially testing new support levels as confidence wanes. The broader crypto market might also feel the ripple effects, as regulatory uncertainty casts a shadow over other digital assets. With so much at stake, the entire market is on edge, eagerly awaiting clarity on this crucial legal matter. The outcome will not only shape the future of XRP, but could also set important precedents for the regulation and adoption of cryptocurrencies worldwide. As May 2025 approaches, all eyes remain fixed on Ripple, the SEC, and the unfolding story that could redefine the crypto landscape for years to come. Understanding the forces that shape cryptocurrency prices is key to navigating this dynamic market. Regulatory developments, like the potential US tariffs and the SEC's stance on XRP, can have a significant impact on investor sentiment and trading activity. Macroeconomic factors also play a crucial role, with interest rate hikes, inflation, and global economic growth all influencing risk appetite and investment decisions. Staying informed about these factors is, honestly, essential for making informed investment choices. In the fast-paced world of cryptocurrency, staying informed is paramount. Market trends can shift rapidly, and news events can send prices soaring or plummeting. Keeping a close eye on financial news outlets, industry publications, and expert analyses can provide valuable insights into market movements. Understanding the factors driving price changes, from regulatory updates to technological advancements, empowers investors to make more informed decisions and navigate the exciting world of digital assets. As we move further into 2025, several key developments are worth monitoring closely. The outcome of Ripple Labs' legal battle with the SEC will undoubtedly have ripple effects throughout the cryptocurrency market, particularly for XRP. Additionally, the regulatory landscape, both in the US and globally, continues to evolve, and any new policies or guidelines could significantly impact the cryptocurrency market. Staying informed about these developments is, honestly, crucial for any cryptocurrency enthusiast or investor.